Take a look at the chart on your screen right now. This is an ETF that launched in June 2025 and has already delivered around 50% return since inception. This is the best new ETF I have reviewed in my channel so far. At launch, the share price was $25.15. At the time of recording this video, the price is around $37.83. That means if you invested at inception, you would have gained about half your original investment in roughly 7 months. That kind of performance is not normal. And when something like this happens in such a short period of time, it demands attention. So today, I'm going to break down exactly what this ETF is, how it achieved this performance, what it holds, and most importantly, whether this type of ETF actually makes sense for you. Before we go deeper, a quick note. If you enjoy learning about new ETFs with massive potential, I have linked 3 videos in the description that cover other recently launched ETFs with compelling strategies. On this channel, I focus on breaking down new and unique ETFs in a simple, practical way. If that sounds useful to you, make sure you subscribe so you do not miss future deep dives. What is this ETF? This ETF was launched on June 2025 and it is an actively managed equity ETF designed to pursue long-term capital appreciation. Instead of tracking an index, the managers take a concentrated, high-conviction approach. They actively select stocks they believe have strong growth potential across different market capitalizations and sectors. The goal here is not to match the market. The goal is to beat it by identifying opportunities early and rotating positions as conditions change. What makes this ETF particularly interesting is its mix of growth-oriented companies and how quickly the portfolio can change. The fund currently holds around 33 companies, with approximately 48% of the portfolio concentrated in the top 10 holdings. That concentration plays a big role in both the upside potential and the risk. Some of the notable holdings include Micron Technology, Lam Research, Western Digital, Alphabet or Google, and Newmont. In addition, well-known growth names like Nvidia and Boeing also play meaningful roles in the portfolio. Unlike passive ETFs, this fund is built through a fundamental stock picking process. The manager actively evaluates macro trends, valuations, and growth prospects and rotates holdings quickly to capture momentum. The portfolio you see today can look very different from what it looked like just a week ago, and that active rotation is a major reason behind its performance so far. There are a few important characteristics that really set this ETF apart. First, it does not rely on any index. Every position is selected based on the manager's outlook and conviction. Second, the strategy spans technology, commodities, industrials, and consumer sectors. This is not a single theme ETF. Any company from any sector can become a leader within this portfolio. Third, the fund blends mega cap innovators like Alphabet and Nvidia with more cyclical or value-oriented names such as Newmont and Western Digital. And finally, despite being actively managed, the ETF carries an expense ratio of around 0.45%, which is relatively modest for a strategy this hands-on. Now that you understand the performance, the structure, and the strategy, it is time to reveal the ETF. This is the ARS Focused Opportunities Strategy ETF, and it trades on the NASDAQ under the ticker symbol AFOS. Let's talk about the risk. Of course, no ETF is without risk. AFOS is actively managed and concentrated, meaning its performance can diverge significantly from broad market indexes. Sector and stock selection risks are real, especially since top holdings make up nearly half the fund. In addition, the strategy is focused on capital appreciation, not income, and it hasn't been tested through a full market cycle yet. Always understand that volatility and drawdowns can hit hard. This video is for educational purposes only. Please do your own research before investing. Who this ETF might suit? This ETF is most suitable for investors who are comfortable with active management, concentrated equity exposure, and are seeking potential above-market returns over the long term. It's ideal as satellite growth position, but it may not be suitable if you want strict index tracking, bond-like stability, or consistent dividends. To conclude, AFOS is one of the recent actively managed ETFs that has delivered eye-catching performance in its first year. Its blend of growth stocks, strong names, and focused strategy makes it a compelling story for investors who believe in active, high-conviction approaches. But with potential for outsized gains comes volatility, so it's important to size your position wisely. If you enjoyed this breakdown and want more ETF insights like this, please hit that like button. drop a comment below with your thoughts on AFOS, and subscribe so you don't miss future analysis on new ETFs with massive potential. Thank you for watching, and I will see you in the next video.